Good morning, everybody. This is the live market open for Friday, December 4th. I'm Yohay Elam, Forex and Market Movers podcast, doing the show for FX Rate as usual. It's a good Friday after a huge rally yesterday in Eurodollar, after the huge upset. Well, as always, we'll cover the recent developments, of course, starting with Draghi, charts and levels, the next 24 hours, and of course, your questions. If you can't see the chat box under the video, please go to tlk.io/fxstreet-forex-live-video. So, Draghi disappointed. Contrary to everything I said and everything I had expected, the ECB did deliver on some things, but expectations were so high in the sky, and Draghi just didn't manage to beat those expectations. So if we look at the chart, okay, this morning we have a drop, but this is an amazing rally that we've seen yesterday. You don't see these kind of things every day. We had the pair fall all the way to 105.20 during the initial mess, and then rise all the way to 109.80. That's 460 pips in one day. Very, very rare, especially if you compare it to the previous days, and in general, I think it's the highest rally that we've seen in Eurodollar since 2009. Okay, so what happened there? First of all, we had the initial, it began with, even before the real announcement of the rate cut, we had this fake rumor from the Financial Times that the ECB would not cut the rates. So we had Eurodollar rising and this atmosphere of disappointing coming in. Okay, then when this was retracted by the FT, Eurodollar fell to 105.20, but then we began getting the real news, and that's when Eurodollar began rising. Good morning, Snarfa. The question is that disappointment not more realistic than the ongoing QE champagne party? Yeah. Yeah, the QE is going on, and the rate cut. Well, let's talk about what happened. We had the deposit rate cut only by only two minus 0.30, only 10 basis points. That was the lower end of the range. Okay, that was sort of the minimum, and this was the path of least resistance, less political objection for cutting the interest rates. Now, if you cut the interest rates just a bit, it opens the door for only a bit more QE, not so much, okay? And then that's why we had the initial rally in Eurodollar. Then we had Mario Draghi beginning to speak. He began, and in a matter of minutes, we understood that there's no new QE. Okay, the ECB continues buying only 60 billion a month, not more, okay? So that was the main disappointment. Okay, there's more political objection here, but expectations stood between 70 to 80 billion, or 75 on average. No new QE. That was the biggest headline, and that caused the biggest rally. Okay, it's quite a huge rally. So here's the Financial Times fake out, but then the real news pushed it higher, and then when Draghi began talking, it continued moving higher. What we did have from Draghi is, well, in addition, the program was extended only to March 2017. That was sort of okay, but there was also an option of extending it indefinitely. What Draghi did offer us, and that was a bit ignored by the markets, is that the ECB will begin reinvesting proceeds, okay? So what does this mean? Let's try to explain. Listen, the Federal Reserve, ended its QE program back in October 2014, okay? More than a year ago. But the Federal Reserve maintains its balance sheet, okay? For each bond that matures, it buys another one, maintaining this 4.5 trillion balance sheet. Up to now, the ECB began, well, the QE program only back in March, announced it in January and began it in March. It's running only 9 months, and so far it's just been buying bonds. But what happens to bonds that mature? Until now, we knew that if a bond matures, it's gone, okay? It falls off the balance sheet of the ECB. Yesterday, we learned that for every bond that matures with the ECB will buy another one, just like the Fed. Okay, this isn't insignificant. This is important. It has a bigger impact for the longer term, not for the shorter term. It means that the ECB pledges to maintain a high level of its balance sheet. Okay, This is meaningful, but it's more long-term. It's not what the market was looking for. It's a smaller measure than QE, so it was ignored. What else did we have? At some point in the press conference, Draghi was asked by reporters, what's next, okay? So he did say we'll reevaluate our policy in the spring, and he didn't say that it's the lower bound for interest rates. So basically, he left the door open for more, and that's what. And if you see this fall here, right here, when the pair almost reached 109 and then fell below 108, that's this thing, okay? So that's, but it was only short-lived because after creating such huge expectations and after this huge disappointment, that means credibility of the ECB is a bit hurt, okay? So it was only served as another buy opportunity, and from there the pair rallied another 150, 170 pips or so. Okay, so these were the main events. I believe that the move was also supported by the Swiss National Bank, which jumped on the bandwagon, used this opportunity to sort of push the euro even higher. It was also probably, of course, triggered some stop loss points, and eventually we had one of the most amazing rallies, and I was, of course, wrong. We almost reached 110. I have on my website a list of 10 reasons why we almost reached 110. Anyway, I expected the ECB and Draghi to beat their own expectations, okay? And this didn't happen. All right, what else did we have yesterday? That was, of course, the big event of the week, and we'll probably keep talking about it for a month or so because it's really huge. But I'll be glad to answer any questions you have about that. Anyway, we had also other things yesterday. We had the UK services PMI beating 55.9. After two disappointments from UK PMIs, we had a beat. That was good news. That enabled the pound to stabilize, and eventually pound dollar also made its way up. Also, thanks to this Draghi disappointment, we had some kind of sell-off in the US dollar, and this pushed the pound higher. But remember, it had also its own motivation. So we had it rally yesterday, reaching a resistance right here, 151.60. Now it's falling back down. We're seeing some comeback of the US dollar this morning. Okay, so that's why we're also seeing euro dollar slip to 108.66. If you compare it to previous days before Draghi, this is a big move, but compared to yesterday, it's just a small move on both these pairs, on euro dollar and on pound dollar. Okay, but we did have a fall this morning of well, something like 70 pips in euro dollar, which is quite significant for previous days, but for yesterday, it's just a small correction. Okay, for pound dollar, the levels are on the downside 150.60 and 150, further below 149.50, on the top side 151.60 and 152. Dollar yen got carried away also. Dollar sell-off, it almost reached this line here of 122.20, a bit above this line. Anyway, I think I still see 122.20 is very, very, very strong support for dollar yen. Currently at 122.75, also recovering. A bit choppy here. High resistance 123.60. Okay, but let's talk about more events. After we had this Draghi thing, the huge event, we also had at the same time US jobless claims coming out as expected, 269. The ISM non-manufacturing PMI disappointed with a slide to 55.9, and also the employment component fell. The US services sector is still in growth. Employment in this sector is still in growth. It's still got good news, just not as excellent, not as great as we had back in October. Okay, more or less the same atmosphere with Janet Yellen. She basically repeated her speech, hinting two things, or laying the ground for two things: a rate hike in December, once again, and that afterwards it'll be gradual. The headlines that came out were that a delay for liftoff has risks. That means we don't want to delay the rate cut anymore. Okay, rate hike expectations in the United States remained. They even rose a bit yesterday to 79% for 50 basis points. As I said, we're going to probably have range between 0.25 to 0.15. And as Adam Button of Forex Live explained on Forex Live there, so for 37 basis points, somewhere in the middle, that's 100% chance according to bond markets. Anyway, it's priced in. We would need a really big disaster today in the non-farm payrolls to make the Federal Reserve not hike rates. Okay, we'll talk about those events soon. What else do we have today? During the morning, Australian retail sales beat with 0.5. That was, but commodity currencies didn't rally as much as majors yesterday. Anyway, we have Aussie dollar within the range lines I mentioned in previous shows, 73.60 on the top side, 72.80 on the downside. Kiwi dollar also had a good time, managed to reach resistance so far without a breakout. 67 cents, 66 is support. Higher resistance is at 67.90. Okay, if we have another move higher, if we have a disappointing NFP. And the previous range, if we have a good one, is 65 to 66. Dollar Swiss. Here you can see how the dollar collapsed against the Swiss franc, just like it collapsed against the euro. Quite an amazing rise and the stairs and fall through the elevator. Yeah, currently 99.70 parity. One is some kind of resistance. 101.50 is further resistance. Support at 98.15. Remember, the Swiss National Bank is active in markets. Yesterday we had choppiness, but all in all, we're back in the same range, 108.43. Wider range is, I would say, if this is a bit shattered here, I would say 109.40 to 107.60, but Euro Swiss trades in this 108 handle, and that's thanks to intervention by the Swiss National Bank to weaken the franc alongside the euro. We had a much bigger reaction for the euro against the pound, huge rally, out of range. I was on the show yesterday with Dale Pinkert and Valeria Bednarek. Dale mentioned that in some cases, euro pound leads moves that are related to the euro. So we had here lower highs in euro pound, and that was for him a sign that the euro would go higher also against the US dollar. So it's certainly an interesting point and worth watching. 72.65 is resistance, 72 is some kind of support, 71.40, 70.40, and on the top side 73.30. Okay, euro yen, of course, also here, huge rally on this druggy upset. When I say upset and I say disappointed, it's not because only I was wrong. It's also because stock markets were disappointed. Okay, because they expected more printing of money from the ECB, more QE, and negative deposit rates mean more money into stocks. Okay. Anyway, 133.53 is the current level. 134.20 is resistance, followed by 135. Downside 133.20 and 131.50. And pound yen, well, quite choppy. Still looking for direction. Clear resistance over there at 186, supported 183.90, and 184.30 is also worth watching. On the top side, 188.10. Okay, so this is the coverage for currencies so far and events we had so far. Let's see what we have today on the agenda, right? And I'm looking forward to your questions as well. Morning, Dylan. You mean higher lows on euro pound, not lower highs? Yeah, higher lows. I said lower highs. So if that's what I said, I'm sorry. Yeah, higher lows. That was for him sign, for Dale Pinkert. Highly regarded and for good reasons, analyst and trader, that these higher lows here along the second week, the last weeks of November, or early December, they were for him a sign of a move higher also in the euro against the US dollar. Okay. Let's talk about events we have today on the agenda. First and foremost, big event of the day is the US non-farm payrolls. As always, the first Friday of the month. The key figure for the United States, the key figure for the dollar. And if the Fed is indeed data dependent, this is the figure they're looking at, okay? Jobs, they have two mandates. Jobs and inflation, this is the key jobs report. It's for the month of November. It's the most recent figure. Headline is expected to come out at 200,000 jobs gained, non-farm jobs. This includes the private sector and the public sector. Weaker than last month, 270, but certainly good enough for a hike. I would say that also even, let's say, above 100,000 is good enough at this point for rate hike, because the Fed is really, really determined to raise rates. It made that clear. Data has been good. One figure, one disappointment will not move it. It'll need to be a huge, huge disappointment, okay? So that's the headline number. Wages. Last time we also had finally a positive surprise, a breakout of range, rise of 0.4 month over month and 2.5 year over year. This time expectations are more modest for 0.2 month over month, and I think 2.3 year over year. It doesn't appear on all calendars. Anyway, the unemployment rate is expected to remain unchanged at 5%, and the participation rate at 62.4. I'll also mention and add on the slide that we have the real unemployment rate, U6, which also once discouraged people that have lost their job and they're too depressed to look for one. So the real unemployment rate, also known as U6, is expected to rise, was last time, sorry, last at 9.8. Okay, so you'll have that also on the screen. Last time it fell from 10 to 9.8 to single digit from double digit. That was good news. A remark here, I agree with them, but more I agree with you, all about fundamentals in this environment. I like technicals, but they are useless in drug and co. Well, thanks for the kind words. Unfortunately, I made a strong case yesterday for why the euro should fall and why Draghi will over-deliver. And I was humbled by his under-delivery. I was made a mistake. Well, but yeah, at least I also talked about that kind of option. Anyway, back to the agenda. This is the US non-farm payrolls at 1:30 GMT. Follow live broadcast on Forex Street. I'll be there. So anyway, these are the key figures to watch. In general, this report is expected to add more cement after Yellen to a rate hike in the United States on December 16th. This is not the only event we have today. It's a big day for the Canadian dollar. We have the jobs report in Canada, which was excellent last time. It showed a gain of 44,000 jobs. This time it's expected to show a correction, a loss of 10,000 jobs. Unemployment rate is expected to remain unchanged in Canada at 7%. Well, I think we skipped the Canadian dollar in the chart, so let's look at it now, okay? So a bit choppy here, 133.55. Lots of figures for Canada, but some of them are mixed. That's why we see some choppiness. 132.80, 132.40 are support lines. 134.60 is resistance. What did we have in Canada so far? So far, we had disappointing GDP. Even though Canada is out of recession, the economy squeezed too much in September. We had the Bank of Canada, on the other hand, quite optimistic. That balanced stuff. And today we have two big events. We have the Canadian jobs report. Expectations are low, so maybe there's room for a surprise. But this is quite volatile. Well, like in other countries, like in the United States, jobs figures are a bit mixed. And another event we have in Canada is the OPEC meeting. Officially, the press conference is planned for 3 GMT, but these are meetings not with the open agenda. They could drag on for hours, or on the other hand, we could have leaks coming out earlier. As far as we know so far, and as far as I understand, the OPEC members, the organization of oil producing, don't remember the initials. Anyway, this cartel of oil producers, which controls about a third of oil production, and a third of this oil production is managed by Saudi Arabia, has been unable to agree within itself Now, because it's only a third, we have other countries like Norway, Canada, of course, the United States, and Russia, and Mexico, and other countries, Nigeria, and I missed a few more, of course, or Nigeria, well, they are in OPEC, sorry. Anyway, there are many non-OPEC countries which also produce oil. Saudi Arabia said that it will be ready to cut if OPEC and non-OPEC countries decide to cut. I don't see them reaching any kind of agreement. They haven't been able to do that in the past. There are conflicting interests there. For example, Iran, which is expected to come back online, is a big rival, enemy of Saudi Arabia. How can they agree? In Saudi Arabia is is against the Assad regime in Syria, and Russia is supporting him. So how can they reach an agreement? Of course, money talks. Of course, there are economic interests, but even with the economic interests, they're not able to align themselves. Okay, so this is the price of WTI crude oil, 41.20. I think it's already reflecting a no-cut decision and everything business as usual from OPEC. Anyway, the lines to watch are 40 and 42.70. Below 40, we have 38, and above 42.70, we have 43.40. If for any kind of reason we have a surprise production cut from OPEC, we'll have a rise in the price of oil, of course, and a fall in dollar CAD, a rise of the Canadian dollar. I think the chances are very, very low here. Okay. In addition, we have US trade balance and Canadian trade balance also at 1:30 GMT. 40 billion deficit is expected in the United States, clearly overshadowed by the non-farm payrolls. So we'll talk about this on Monday, but as just an anecdote or something that feeds into GDP, but not as it won't. I don't think it'll move markets today. And we have an interesting appearance from Mario Draghi in New York. He'll speak there in a conference. It's not a surprise, but he'll have a chance to react to the market reaction. Okay, so let's look again at euro dollar. Okay, falling from the highs, down on the day 60 something pips, but this looks like a correction. This looks like a dead cat bounce just on the other side. Okay, it's a big move in terms of previous moves, but comparing to the big rise seen here, it's just a small correction. Okay, so he has a lot of fixing to do if he wants a weaker euro and if he wants stronger stock prices. I'm not sure that's what he wants. Maybe it's okay for him, this kind of euro. I believe he does want weaker levels. I believe he will talk about readiness to act again if deflation doesn't reach its goal. Another thing we know about yesterday's decision is that there were 5 dissenters, German members, of course, Jens Weidmann, the head of the Bundesbank, and Leute Schlager, or sorry if I'm butchering her name. Anyway, and 3 other members voted against. So he has also political opposition. Let's see if he tries to talk down the euro by promising to do more and say, or putting an emphasis on how important the reinvestment of proceeds is. So that's an interesting event towards the end of the day. Yeah, let's see about that. I see we have questions. So OPEC leaks are always possible sooner than 3 p.m. after 1:30 p.m. or so. Thank you very much for that point. Yeah, I also think we'll have some leaks. The leaks we had so far, the reports are that there's no kind of agreement. Anyway, yeah, so let's open our eyes. Thank you, Dylan, for news from OPEC around perhaps the NFP release, right? If that's what, more or less at the same time. Question from Chris, good morning. Do you think we will see a longer downward correction in the euro after the huge upward move yesterday? I think it'll be hard. We'll need everything to come together. We'll need an excellent non-farm payrolls, and I don't think we'll have that today. I mean, something like 250,000 and higher to sort of boost the US dollar across the board and also hit the euro. We'll need Mario Draghi to explain that he'll really do more quickly, and that the balance sheet of the ECB will balloon or things like that. It's possible, but I think it has lower chances. Of course, we might see a correction, but if we have a mediocre NFP and Draghi not saying anything new, we can also see a challenge of 110, because the disappointment from yesterday, the big surprise from yesterday is huge. You can see it on the chart. You can see it in the European stock markets. You can see it in all the analysis, not only from me. So chance of correction, low. Everything is possible. I believe Draghi wants a lower euro, but let's see. We have, in the meantime, some kind of correction, but not huge. Question from Natia. View on the odd Australian dollar. Well, let's put the chart back on. I must say my view on the Australian dollar has improved lately because of good news from Australia. Basically, we had an excellent jobs report there, showing almost 60,000 jobs gained. We had, you're talking about euro odd, sorry. So regarding the Australian dollar, I'm more bullish, and regarding the euro, well, we had a huge move yesterday, but in general, where's euro Aussie? So that's an amazing rise also here, because the Australian dollar yesterday was stable and the euro shot higher, 148.40. I see this level more or less as support because it was resistance right here. You can see this level, interesting, isn't it? So this move below this level, I think it's on technical terms, it's a false break. Anyway, 184, 148, 40 more or less where we are now. That's kind of support. We can put resistance, I think, right here. 149.50, further resistance at 151.50 right here, which was both support and resistance. And to the downside, we have 145.80, significant support, and 144. Okay. So I think that after the dust settles, there's room for the downside on this pair, because we still might hear more regarding the euro, regarding monetary policy easing in the future, and the Aussie is relatively stable, China is relatively stable, but in the shorter term, the euro still has room. I still see this kind of correction that we have this morning as a correction, and not because the move yesterday was huge. Okay, so these are the lines to watch on euro Aussie, and we'll need a dramatic shift, once again, a quick shift from Draghi to change the course also of euro Aussie. Okay, question from Munir, please comment NFP release selling euro dollar before. No, in general, please wait for the news, especially on huge events like this that trigger very choppy actions. Euro dollar, especially after yesterday's move in euro dollar, is a bit crazy. So it's better to wait for the news, understand what's going on. In many cases, we see euro dollar and other currencies react in the wrong manner to the non-farm payrolls and to other releases, even though and then switch to the other direction. That might be because of algorithms, because of lack of liquidity, because the headline figure might be a small disappointment, for example, but then markets also read the wage data, and that is great. Or on the other side, we have a beat on the headline figure, but we have huge downwards revisions, okay? So it's sometimes, of course, the headline figure is the most important one, and the algorithms respond to that, but it's not always the correct reaction, okay? So wait for the news first. A question from Jax, it's okay, Yohay, if I had a dollar for every time I was wrong, it would have lots and lots of dollars. Thank you for the kind words, Jax. Yeah, see a question here about Sweden. Sweden was the first European country to introduce paper currency in the 1800s, and today I think might be the first to exit fiat 100%. They already use only 20% of fiat and use mostly electronic payments. Could this be the catalyst for fiat in Europe come to an end? Anyway, my worry is more about what base currency to trade FX, and it changed to USD a few years back, but the risk of having base FX currency in USD with only the feeling diversifying or FX fund split. Well, I think paper money is here to stay for a long time because cash is cash. In Spanish, they call cash efectivo, also means effective. So I'm not sure cash is going away. Using only digital money has an advantage because for tax reasons, it's easier to evade tax if you have a suitcase full of 500 euro bills, for example. But and the authorities might want to crack down on that. But of course, it means much less privacy. So yeah, digital is very useful, but it also has privacy issues. So yeah, the case of Sweden is very interesting. I think in general in Nordic countries, they use lots more credit cards than, for instance, in the Eurozone, especially here in Spain, for example. I mean, of course, credit cards are in wide use, but cash is preferred. And regarding base currency, I think that the US dollar is here to stay as the world's #1 reserve currency, despite the rise of China, despite the rise and fall of the euro. So, yeah, I don't know if that answers your question, but another question from Manir: NFP released positive or negative? Well, I think it'll be. I don't think it'll be very different from expectations. Expectations stand on. Let's look at the FX Street calendar on Forex Crunch here. So we have expectations stand on 200,000, which is, I think, quite realistic. Maybe we'll have a bit below, maybe a bit above. According to ADP, it's going to be a bit above. According to the ISM non-manufacturing, a bit below. So if it's positive, of course, it's good for the US dollar. Negative, if it's weak, it's negative for the US dollar. It's not the only figure to watch. Watch also the wage figures, because wages are the source of core inflation. Eventually, if we have a strong rise in wages, it's also dollar positive. If we have a decline in wages after rising 2.5% last time year over year, if we have it falling back to 2%, it'll be very disappointing. Okay, so these are sort of the main figures to watch. More comments here at this moment. It's easier to push the euro higher than lower, in my opinion. Should NFP disappoint, you don't want to be short euro. I certainly agree. There's after yesterday's big, huge move, we're expecting. So the atmosphere, the bias is long euro. Okay, we would need really to change the course. We would need a huge NFP beat, and also some very, very depressing words from Draghi. It'll hard for him to backtrack change the market mood instantly. Okay. Yeah, try changing 500 euro note in the UK. It's not possible now. Yeah, they were used to be called they were called Bin Ladens because they exist, but you can never find them. Anyway, Bin Laden is gone already for over 4 years, and I've seen once this note in the bank, but anyway, there was an idea to take them out of circulation. Yeah, and another comment. Yeah, so many revisions. Exactly, there were so many revisions to the Nonfarm Payrolls reports. Things that looked bad became worse, or became better, or things that looked good were changed. So we also have to watch out for the revisions. Last time we had a blockbuster one, but beforehand we had a miss on the headline, negative revisions, poor wages, everything went wrong. So everything, yeah, it's all one mix. Remember, the initial reaction is more to the headline, and the initial reaction is very, very choppy. Okay. Okay, so far we're seeing after this correction in euro dollar, we're seeing a bounce back up. So we're 30 pips up from the lows. Compared to yesterday, these are very small moves. Compared to previous days, these are huge moves. My expectation, 181 increase in employment result, 271 in employment. Not sure I understand the question. Anyway, last time we had 271, if that's what you're referring to. And this time the expectations stand on 181. Okay. Sorry, they stand on around 200,000. 181 is certainly within this range and will not be a big surprise. I mean, a small negative surprise, but not. That means within range, and it'll move the focus to other figures such as wages, revisions, even the U6. But I focus on wages and the headline number. Okay. Let's see if we have more things to talk about today before we reach the wrap up and the preview for next week. Oh, just a reminder of the ECB expectations yesterday. So just the slide from yesterday, expected minus 0.30 or even minus 0.40. Expectations for the QE stood on a rise to 70 to 80. At the end, it was unchanged. Expectations for lengthening QE to 2017 or even unlimited. 2017 only 6-month extension. And what's next is Draghi done or not, officially not done, but after the huge expectation and disappointment, we're a bit stuck, right? Okay. Any more questions before we reach the wrap up for the day? Any more currency pairs you want to ask about? 200 plus this time, NFP and life revision might be a touch higher. Okay. Yeah, we had a big bounce in October. It was a really great month. And after a few 2 weak months in September and August. We'll have today for the non-farm payrolls also, of course, a revision for October. Let's see if it was really as great as initially reported. According to ADP, ADP already revised its October figures higher. Let's see if September also moves anything. The focus of the markets is more on the headline of the last month rather than on revisions. So if we have a big surprise to the upside or downside on the headline, we have less expectations. We look less at the past. Okay. Anyway, I think it's time for the wrap up, and then we'll do a preview for next week's events. Okay, as usual on every Friday. I thank Mauricio for this great initiative. So this is the wrap up for the live market open for Friday, December 4th. Everybody's talking about Mario Draghi's disappointment for stock markets and for Euro bears. What happened yesterday? We had a deposit rate cut only to 0.30, only 10 basis points. That was the minimum of expectations. That was the first rise in euro dollar. Then the big bomb came from no new QE. It stays at 60 billion a month, and this hurt the dollar, boosted the euro even more. The QE program was extended to March 2017. That's within expectations, nothing new here. The ECB wanted to surprise us by announcing its reinvesting proceeds, buying a bond for every bond that matures. It has only long-term effect, and it's not what the markets were looking at. And they did open the door to doing more even in the spring, but after creating such huge expectations and providing such a huge disappointment, it only had a temporary effect of weakening euro dollar, and then the rally continued. Okay, so euro dollar chart, everything looks small in comparison to yesterday's big rally. 460 pip range from the lows that it reached after the retractment of the FT rumor and the highs of the day from 105.20 to 109 108.80. Now we're seeing a fall, currently at 108.86. We've already been under 108.60 today. Lines to watch on the top side are 110, of course. On the downside, it's 108.30, which is a clear separator of ranges. Further support 107.60, 107.10, and of course 106.30 and 105.30. To the upside, we have above 110, we have 111.30. Okay, in any case, we expect had a huge rally, and this disappointment from Draghi is likely to echo and echo and echo and impact markets for a long time. What else do we have? Yesterday we had positive UK services PMI beating expectations. After a few disappointments, it allowed the pound to recover alongside the US dollar sell-off that came after Draghi. In the US, we had okay figures, jobless claims as expected. ISM non-manufacturing PMI slipped, but still on high ground, including the employment component. Janet Yellen repeated her speech, basically two messages. First of all, rate hike is probably coming in December, unless we have a huge disappointment. And afterwards, it's going to be gradual. Her specific words or specific headline was that a delay to a liftoff has risks. Okay, so that was a key event over for Yellen, but it's something similar that she said beforehand. Okay, today on the agenda we have, of course, the US Nonfarm Payrolls headline expected 200,000. Wages are expected to rise only 0.2 in comparison to last month's huge rally, a huge rise of 0.4. That it came out of range. Wages broke out of range last time, rising 2.5. This time expectations are lower. And employment rate is expected to remain unchanged at 5, and the participation rate at 62.4. Real unemployment rate last time was 9.8. I believe that an okay jobs report, even 150,000, even 100,000 would be good enough for a rate hike. Of course, better is better for the US dollar. Watch out, first of all, for the headline number, then for the wages, then perhaps revisions, unemployment rate, participation rate, but number one, headline, number two, wages. Okay, that's the key event for the day. It's not the only event for the day. We have at the same time at 1:30 GMT also the Canadian jobs report. Expectations are low. We have also trade balance and from both countries, but they're overshadowed by the jobs report. And for the Canadian dollar, it's not only trade balance jobs report, but also the OPEC meeting. No changes expected. These countries in OPEC and the countries outside OPEC are not able to agree on anything. It'll be a huge surprise if they decide to cut production, higher oil, and higher Canadian dollar. But I believe nothing will happen there. Press conference is planned for 3 GMT, but as a comment we had here from Tilan, it might come already around the NFP. We might have some leaks. And last but not least, Mario Draghi speaks at 4:45 GMT. He speaks in New York. Let's see if he tries to fix the damage he did yesterday. For him, it's damage because a stronger euro means weaker exports and weaker inflation. It's not what he wants. Anyway, it'll be hard for him to reverse what he did yesterday. Disappointment not only for euro bears, but also for stocks. Okay, let's cover a few currency pairs. We talked about euro dollar, pound dollar, enjoying good data. 151.15 at the moment. Yeah, chopping around 151.60, 152. On the downside, 150 and 149. Dollar yen, stable 122.80, support, clear support 122.20, and strong resistance 123.60, very well-defined range. Dollar CAD has a big day today, currently well within the range. Lines to watch are 134.60, 132.80, and 132.40. Aussie dollar received some positive news from retail sales, currently 73.25. Also here, very well-defined range of 72.80, clear separator to 73.60, and the Kiwi dollar failing so far to break even higher to above 67. 67.90 is the next resistance. 66 is support, followed by 65.50. Okay, so these are the main things to watch. Markets are still digesting Mario Draghi's big disappointment yesterday. Okay, so that's the wrap up for today. And now let's do a preview for next week. So next week, the week that begins on December 7th and ends on December 11th, Monday is very, very quiet. I think markets will continue digesting the big events of this week, the non-farm payrolls that we had today and the ECB decision we had yesterday. So that's time of reflection, if you wish, on Monday. On Tuesday, we have final Japanese GDP. We'll see how bad the recession is in Japan, if it'll trigger more action from the Bank of Japan. Expectations are low. Chinese trade balance. Remember not to watch the headline number, but rather exports and imports, especially for the Aussie imports are more important. We have US jobs, the job openings report. It's for October, not for November like the NFP, but the Fed likes this figure. It's another jobs figure, so it'll certainly move markets. On Wednesday, we have the first rate decision of the week. For next week, we have a rate decision in New Zealand. They're expected to cut the interest rate, but that's, I think, already priced in. We'll talk about that in detail next week. It depends on the sentiment more than the action. On Thursday, we have a busier day. We have a jobs report in Australia. Last time it was excellent. Let's see if we can continue. And we have two rate decisions on Thursday, busy day next Thursday, December 10th. And Switzerland, let's see if they continue to intervene and if they cut the interest rate even deeper. Remember, I don't talk about the Swiss franc too much, but their rate decisions come only once every 3 months, so this one is important. I mean, every decision is more important than another central banks. And the UK rate decision, no changes expected. But we have the meeting minutes, which are very, very important. And let's see if we have the continued pattern of 8-1. And if the Bank of England perhaps becomes more hawkish after, as the Fed is also expected to raise rates. And on Friday, we have a focus on the US consumer on two figures. US retail sales for November. Also, perhaps one of the last important figures before the Fed decision on December 16th, and it's a key part of the US economy. And we have US consumer confidence from the University of Michigan. It's a preliminary figure for December, so very, very fresh. Expected to reflect on, to provide an indication for Christmas sales in December, but the correlation is not always clear. Doesn't matter, it always moves markets. So in comparison to this week, all in all, next week is more calm, more digesting initially what we had this week, and then beginning to transition away, less focus at the beginning on the United States, but then towards the end of the week, more in the United States, and we have some limelight on other currencies as well. It's sort of a transition between the ECB and the NFP to the last major event of the year, the expected Fed rate hike on December 16th, okay? Which is not a done deal. I think it's almost certain, but you never know. Okay, so that's the preview for next week. But we have more questions, and let's try to answer them right now. We have a question. Draghi probably didn't sleep well last night. Yeah, I believe so. Probably, and this morning he probably read all the newspapers. Well, he may have read them online yesterday as well. Watched TV and saw his face with the word disappointment. I'm sure he didn't like it. Let's see, he'll probably defend what he did, and I think he'll put some emphasis on the reinvestment of proceeds. Let's see if it'll work out for him. I think markets are a bit in shock. Anyway, what pairs to watch today beside your dollar? Well, it's a dollar CAD, huge day for the Canadian dollar. So we have in Canada both the jobs report, also trade balance, and of course the OPEC meeting. Jobs report is the most important thing for the Canadian dollar today. So that's, yeah, those are the pairs euro dollar, also because of Draghi, and also the dollar CAD because of all the events in Canada. I would also say dollar yen. because often non-farm payrolls has the biggest effect on this pair. It's less sensitive to other things, like the euro is still sensitive to drug and has a clear bias, and dollar yen not so much. So if you have a big surprise to the upside or the downside, dollar yen, maybe we'll have a break out of the range, 122.20 to 123.60. So these are the three pairs to watch: euro dollar, dollar CAD, and dollar yen. All right. So that's it for the show today. Thank you very much, everybody, for coming. Thank you very much for the questions. As always, we'll be here on Monday. As always, the show is recorded, the wrap-up is recorded, and the preview is recorded. So you can rewatch everything whenever you wish. It'll be published on FX Street and then also on Forex Crunch. So thanks, everybody, for coming. Wish everybody a safe and successful day with euro dollar or with any other currency pair. And I'll see you on Monday. So thank you and goodbye.